talk retirement. Specifically, what's a business worth when the owner decides that it's time to retire and they need those funds to get them through for the rest of their lives, and they just hope that it's going to be enough. So in this, we talk about business value gap. Today, Kurt and I are going to talk about what drives business value gaps and whether there's going to be enough there, what you can and what you can't influence. There's different things, different assets that people have got. Predominantly their home, shares, investment properties, and for the business owner, a big part of it is the value of their business.
How you going, Brian? You've mentioned the assets that people are going to rely upon in their retirement. A number of those assets you really can't influence. So the value of property, you can choose the right property, but once you've got a property, you can't influence really whether it's going to go up or down. Shares, the market's going to drive your share prices. You can choose the right shares, but you can't drive the market. But the value of your business is something that you definitely can have a huge impact on. And I guess that's something that we're passionate about to try to make sure that our clients are improving and maximising the value of their businesses.
Yeah, absolutely. And the first part of that is to actually know what the business is worth and try and analyse what you need in retirement, and then bring that back and say, well, is the business and what I expect it's going to be worth? Because it might be worth a lot, it might be worth a little. There's different things that drive that value. But determine what the value of the business is, but also then what it needs to be for you to maximise your retirement.
Definitely. When you're looking at what it needs to be, you need to know and what you need to live on in retirement. So if you can have an idea of how much you're going to need per year once you retire as far as spending money goes, you can look at an estimation of your life, and we've got, there's obviously data about that. So if you're thinking, well, look, I need $70,000 per year in retirement, and let's say the average life you're going to live to 80 or 90, 85, 90, are your assets that you have, including the sale of your business, going to fund you into that retirement?
Yep, for sure. So when we talk about value, give us a few of the things that actually drive value in a business.
Yeah, so businesses, basically, some businesses are not saleable. So there are certain businesses that are purely dependent upon an owner, so they actually may not be saleable. But a lot of businesses are saleable at a value. And when we talk about dependency on an personnel, if your business is dependent upon yourself and you can withdraw yourself a bit more from that process, if you can put procedures in place, get other key personnel in place in your business, then that actually in itself would make your business more saleable.
Yeah, absolutely. And this becomes a process. It's not exactly, some of the time it's not exactly a short-term process where you need to change processes, procedures, systems in a business to make it less reliant on the owner, or to actually specifically change things to improve it so that when it comes time for sale, there is real value there.
Definitely. Businesses that are showing a growing trend are also more valuable. So when you look at a business valuation, you compare past 3 years. If you're getting a dropping profit, a dropping turnover, then that business is less valuable than if your business is increasing in turnover and in profit. There is a number of different things that will drive that value and things that you can directly influence.
Yeah, sure. So things like competition, level of risk involved in the business, systems, IT, staffing. There's a whole range of things that actually make up that value factor that people are going to look at.
Definitely. When we talk about procedures, debtors collection, so if you've got a high level of accounts receivable in the business, then that will drive down the value of the business.
Yep.
So,
yeah, there's a lot of factors that come into play. The reality is every business is going to have a different value depending on who's looking at it at the time. Every purchaser will think it's got a different value, and traditionally owners think their business is worth a whole lot more than what they tend to be. So how do you find out? We do a thing called a business value gap, a business value gap analysis. And I guess what we encourage clients to do and what we would encourage you to do is, if you do not know the value of your business, or if you don't know what you're going to need in retirement, come in and speak to us. Probably allow half an hour to an hour. We're offering a free business value gap analysis because we see the benefit that it could drive to businesses.
And yeah, I guess what that does is it starts you off in the process. You can then see what you need in retirement, and you can see where you're currently at as far as your assets and your business value.
Yeah. So there's no time like now to start planning for retirement. You don't have to be in your 50s or your 60s to start thinking retirement. It's now, whether you're 30s, 40s, whatever. Start thinking about it now and make your business the best that it can be to get the maximum value you can. So call Clifton Accountants today. Let's run a free business value gap analysis with you and make your business the best it can be.